Well, let's get straight to the market action with Citi Research Director Drew Pettit and Ariel Investments Vice Chairman Charlie Bobrinskoy. It's great to have you both on here today. And Drew, I'll start with you because I'm looking at your notes and you seem pretty constructive on stocks here, given the drawdown we've seen in recent weeks.
Yeah, look, I think the message we're trying to send is stay the course. When we were talking about the first half of this year in December, it was about first half volatility. And then all of a sudden, when you get it, in policy uncertainty, which a lot of people were talking about, then do you really need to freak out or not? Look, we understand there's still some uncertainty ahead around tariffs and the impact on earnings, but at these levels, let's call it 5,600 today, feel a lot better than we did when we were trading, north of 6,000.
Charlie, do you feel a lot better, especially as Mike Santoli put it just a few moments ago, we're in the midst of peak policy uncertainty?
Yeah, this may surprise you, Morgan. I get accused of being a perma bull. I've been pretty bullish on the economy for 4, 5, 6 years, and I'm cautious here. I think people are familiar with history, know how dangerous tariffs are. It is not an exaggeration to say that the Great Depression was caused by Smoot-Hawley and a trade war. Tariffs, the fundamental document in capitalism is The Wealth of Nations by Adam Smith, written in 1776, which made the argument for free trade. It is a foundation of our economy, the world's economy, and we are playing with fire. I think this is very still dangerous. I hope people are right who think that Trump is bluffing, but if he's not, and he's really going to put these tariffs on, it's going to be very painful and more painful than what's reflected in the market right now.
So, Drew, is this mainly a question of whether or not you think a recession is likely here?
I think it's how deep and how long. We've said this looking at the data over history is if you really want to know where the S&P was going in the 80s, figure out where GDP is going. If you want to figure out where it's going today, it's a little bit more about secular trends, not to completely divorce the two from one another. But look, I just think, recession is going to hurt the growth side of the market, but there's still some secular tailwinds. There's still a lot of focus on productivity. And I think there's a lot of levers companies are going to pull, and they're not just going to take tariffs and changes, just kind of lying down, sitting back. So to us, look, I'm probably more glass half full than Charlie is here. But at the end of the day, tariffs are a negative. We really do need to get past that if we want serious upside.
Charlie, on top of that, student loan defaults are starting to hit consumer credit scores. What's the impact, you think, of that going to be, and how should investors position if they're concerned about it?
I think you got to broaden that. I think it's not just student loans. I think it is the consumer got big payments from Washington in the COVID years, and they have gotten big payments that are now slowing down. And I think Brian Moynihan said something that surprised me. He said the consumer is in better shape than people think. I don't see that. In the portfolio companies that we talk to, we think the consumer is okay. There's obviously very low unemployment, but the consumer is feeling some strain here. And so you're going to see it with some higher student loan defaults. We're going to see it with credit card payments being a little weaker. I think the consumer is not in great shape.
So, Charlie, I want to talk to you about a name that you have owned for a while. You've recommended on the show, MSGS. What do you think now that we saw a record sale for the Boston Celtics earlier this week, which actually sent shares of MSGS higher? We talk a lot about fixed assets or assets that are not tied to the public markets. Sports does increasingly seem to be one of those.
You're exactly right, Morgan. This is the kind of name that we want to buy in this environment. The sports teams, the TV revenue is not going to head down. The people that buy suites at Madison Square Garden are not people that are going to feel some of the effects that I talked about on the consumer. So we think the NBA is in very good shape. Remember that Madison Square Garden Sports owns not only the Knicks, but the Rangers as well. And the stock is now trading for less than the price of what the Celtics were sold for by themselves. So you put this all together, and we think that MSGS is selling for 40 to 50% below what it's actually worth. Now, we got to get Mr. Dolan to consider a sale, and that's not going to be easy, but the value is there.